Do you understand money? I mean, do you really think you understand money? Because by the end of this video, we're going to challenge exactly what you think about money. My name is Carmen.
And I'm Darius. And my understanding of money, I didn't realize that it went beyond just going to work and coming home and having that direct deposit hit the bank account. Like, it goes way beyond just that.
Yeah, you didn't understand your role.
I didn't understand my role. Now, before we get into this video, make sure you hit the subscribe button and notification bell to be notified when we post new videos.
I think you bring up a really great topic that's going to segue into the 7 points that we have today as far as understanding our role with money. Because a lot of times we are very passive with money, right? We just go to work, we get a check, and we call it a day, right? We're good with it. But then, like you said, it takes another step. If you really truly want to build wealth, if you want to make more money, then it goes outside of just collecting your paycheck.
Right.
And I think for me too, I can totally agree with that, because or at least what I perceive to be successful is just that. Going to work, getting a job, maybe taking a vacation or two and calling it a day. But not knowing that that's really like defense. I didn't have an offensive game with my money.
Well, my understanding started with my parents. How my dad would work and come home, and then my parents would figure out how to pay all the bills, or my mom would pay all the bills. That was the easy part. Like, I understand my dad, he worked 12 hours, but just that portion of it is the easy part in understanding how we need to play a bigger role in our money and how it's managed, especially as we think about whether or not we're financially literate or not.
Yeah.
We need to play a bigger role in our personal income, especially if we're talking about generational wealth and having money for the next generation. It requires more of you as an individual. And some of those things, like the first point, is commitment and patience. When we think about our commitment and patience as it relates to our long-term plans, we have to have a habit. And having the right habits after we get paid is more important than what we do before we get paid. Yeah,
and you said financially literate. I think that's a hot topic that we should take a moment and discuss. Quick sidebar, because I find that people get offended just with that word, financially literate. And it's really nothing to be offended about. It's more so just like, do you know what money? Like, it's just more so like a statement in the sense of like, your financial education should be a priority for you, because money is everything. Right? How do you have your house? How do you have your car? How do you have all these things? It's because you were able to make money in order to make it happen. But then we have to take transactions to the next level. How do we buy a house? Does it make sense for us to buy a house? Does it make sense for us to buy a car? Does it make sense for us to have credit cards? You see how like the offsprings happen with all of this income that we potentially have. And now this goes into, what do you really know about money? Because then we talk about interest payments and we talk about debt. There's just so many things that birth from the subject of having money that I really find in our society today, we are illiterate.
Right.
With
financial
finances.
decision making.
Any financial decision making, right? Like, should I buy this thing on Amazon? Just because I want it doesn't mean that it makes sense to have it. And really challenging the thought of like wants versus needs, going back to that, and just the world that we live in with being consumers and capitalism and all of that.
Yeah, I think what was created when it comes to commitment and patience is the immediate gratification that we receive whenever we buy something from Amazon. They're able to give it to us immediately. Whenever we go to the store and buy our favorite pair of shoes, we're able to get that immediate gratification. But when it comes to building long-term wealth, we have to have commitment and patience, which we don't practice every single day. So naturally we built a habit of just having immediate gratification.
Yeah. And as you were saying that, this made me think about something like with our parents' generation, right? Because each generation wants the next generation to do better, to have more.
For the most part.
And that wasn't the case for you?
No, I'm just saying not everybody's
wants the same. So I think when we have that, when we take that into consideration, we realize that, yes, we want more for each generation. However, what does that look like for the next generation, right? Because my generation, my parents work really hard so that I could have like really nice shoes, really nice clothes. And now I want more for my daughter. What does that look like? Now, she will be expecting, right, a certain lifestyle that she has to then maintain when it's going to be time for her to start earning an income. So are we setting up the next generation for failure because as parents, we're able to provide a decent living for our children? I don't know. That's a whole nother topic that we should probably be talking about for next day, but just thinking about that, right? Because, gosh, I can't remember the quote that was said, but it was like, if you had granite countertops in your house, growing up, you will want granite countertops in your house when you get your own house. Can you afford them? I don't know. That's different. I knew you were going to say something smart.
No, I'm not going to say anything smart. Naturally, from your childhood sets your default on what you think you should and shouldn't have, or should and shouldn't accept. So granite countertops, as a kid, you're naturally going to want that. You're naturally going to want something bigger and better compared to where you were, because you want to see some progress based off of where you came from.
Yeah. I was just waiting for a joke or something to come.
No, I wasn't going to have a joke.
Okay. All right. So
I ain't know nothing about granite countertops.
See, I knew you were going to say. I just knew it. I knew it. I've been married 10 years. You know this man. So now refocusing, going back into these 7 steps, Darius and I were just having an off-camera conversation about the confusion we feel that people have with this topic of infinite banking that we talk about, and why can it be so complex for people to understand? And it's because we don't have the foundation. We don't have the foundation of the financial education. We are financially literate in order to understand the complexities in which infinite banking can have. And so the reason why we feel like it's important to go through these 7 steps is because this can relate to anybody, regardless of what level you are with your financial education, because it all goes back to these principles. And as we relate commitment and patience to infinite banking in this whole process, is you have to be committed to the long-term play. This is a long-term commitment. When you get a policy, you're probably going to pay for a policy for your entire life for at least 10, maybe 15, 20 years. And so you know that every single time you pay your premium, it's going to put you better off than the year before. And so going to the patience, you can see your illustration, it's coming. How we create our policies, you can see the money that's going to be there within 5, 10, 15 years, for example. But again, it just goes back to owning the process and being able to see the light at the end of the tunnel, because the seeds that you're planting.
Yeah. And what infinite banking does, the conversation we were having, is that it takes all the basics of financial literacy and put it all in one thing. Because with financial literacy, what we do have to discuss is we have to understand budgeting, savings. We have to understand emergency preparedness. We have to understand financial decision making, some of the things that we just talked about. We have to understand financial goals, debt management, insurance, investing, taxes, retirement planning, estate planning, credit, financial products, compound interest.
We had to write it down clearly because that's a lot. Financial education, right?
That's a lot of financial education. But what infinite banking does is it puts all those things that you should know together, and you won't understand it. You won't understand infinite banking if you don't understand any of those basics that I just talked about.
Do you remember? Hit the mic. Do you remember what you said about Dave Ramsey and Robert Kiyosaki? Can you bring that back?
Yeah. So Dave Ramsey and Robert Kiyosaki both are in financial education, but what they represent stand on the polar opposites of one another, where hot and cold is temperature, but they're the polar opposite of each other. But Dave Ramsey and Robert Kiyosaki are the polar opposite of one another as it relates to financial education. However, they're still right. They're still talking about the exact same thing. It's just from a different perspective. Dave Ramsey's focusing on budgeting and saving, while Robert Kiyosaki is talking about is focused on credit and investing. It's the exact same thing. And what we have to understand is that when it comes to financial education, they're both right. Yeah. And
it's all a part of it.
It's all a part of it. But we have to understand the basics to even relate to them on either spectrum.
Absolutely. Okay, so the second point that we have, I'm going to read because Darius took copious notes. So I want to make sure that everything that he put out, we giving it to you guys, okay? He works very hard on these scripts. So financial responsibility, infinite banking encourages individuals to take control of their financial lives actively. A positive financial mindset, which includes responsible spending, saving, budgeting habits, is essential for the success of infinite banking.
So still again, we're still using points of financial literacy, but we're talking about this concept.
We could be talking about budgeting, right? It's
All the
still
time.
important. We could be talking about, like you said, on the other side of the spectrum, Robert Kiyosaki, cash flow. It's the same thing.
Yeah, but the important thing is when we started, where I said I didn't understand the role that I played. You have to understand the role that you play in your financial destiny, education, whatever you want to say, whatever it relates to you and your understanding of money. It's what you understand, because a lot of times I think what we do is we want to blame somebody else for what we personally don't have, when it's us who decided to make that decision and not have what we don't have or whatever we're upset about. And it's much easier for us to look in the mirror, because we can make a change right then. We don't have to wait on somebody else to do it.
No, it's harder to look in the mirror.
It's hard to look in the mirror, but we can get the fastest results by looking in the mirror.
When we choose to.
And that's taking responsibility.
It absolutely is. And with that, I say it's harder because how many times do we take responsibility or own our own lifestyle in any facet? In fitness, in health, in money, right? In relationships. How many times do we take responsibility of what's happening? It's always somebody else's fault.
It's the devil. The devil made me do it.
and having the scapegoat.
Yeah.
Right? So
it's convenient to be able to blame the devil or somebody else, because that means we don't have to take responsibility.
The tax man. Yeah. So it's literally like if you decide that you want to have some sort of income, then congratulations, you are no longer a victim. We upgraded you all today, right? Because you have to take responsibility of what's going to happen, and you have to decide what is the role that I'm going to play. And if I decide to not play a role, again, you still can't be a victim because you chose the role to not participate. Right? So you either choose to participate or you don't participate. And then you have to be okay with the decision that you make. You know, if you decide to participate, then you know when you show up for your financial job, you either going to wear a suit and tie, you're going to wear a nice stylish t-shirt like we got going on, or you're going, you know, however it's going to be. You need a desk, you need a setup, you need a computer. What is the role that you need to play in order to ensure that your finances are going to be successful?
I think a good illustration of this is the Think and Grow Rich in the section where it talks about auto-suggestion.
Yeah.
How if you can have your mind is a garden, and if you don't take care of that garden, weeds are going to grow. So the same thing with us. If we don't take on the responsibility of our finances, then weeds are going to grow up where we fail to take responsibility, where we fail to take action on our education, on our responsibility, on our commitment to a particular goal.
Absolutely.
Things are going to happen in that space where we fail to have a presence.
Absolutely. I love it.
Are you looking for a life insurance policy specifically designed to help you accomplish your financial goals?
And if you have a policy or if you're looking for more education, would you like to be a part of a community with like-minded individuals who are all using life insurance to accomplish their financial goals? If so, click on the link below. We would love for you to join the Wealth Nation Money School. Now, point number 3, understanding and education. A proper mindset involves a willingness to learn and understand the mechanics of the infinite banking concept thoroughly. This includes grasping the nuances of how a whole life insurance policy could work, how premiums are structured, and how to maximize the cash value within the policy.
Now, that's education about how to maximize the cash value growth within the policy. You maximize the growth within the policy by investing.
One thing I think that's missing here is application.
Yes.
Right? Because we have one thing is to have the understanding. The next thing is to have the education, understanding, right? And then the next thing is application. So it doesn't matter how much understanding and knowledge you have, like what are you this goes back to the participation. Are you going to take action and participate, or are you just going to let the pile of information sit on your desk and not do anything about it?
Yeah, in this situation, I think when it comes to insurance is also a part of our financial literacy, and insurance itself is something that we all need.
Yeah.
And if it's your decision to have your insurance policy, be it term or whole life, then that's okay. The only thing we're saying is when we take the responsibility and educate ourselves, we can leverage the cash value differently for our investing needs.
Yeah.
We can leverage the cash value differently for our financial needs. We can leverage the cash value differently to maximize our estate planning and retirement planning.
Yeah, our debt needs.
Our debt needs. Yeah, whatever our needs are, if we decide to make it a priority
if we choose to.
if we choose to.
It all goes back to the role. You guys see where we're going here. And again, like what we said with education and taking action. Remember the temperature scale that Darius was talking about? It's all related to everything that we have. So if you're on the bandwagon of infinite banking, what we talk about, great. If you're not and you decide that you need to look at budgeting or from a cash flow perspective, again, it's all about education and then the action that you're going to take in order to make things happen.
Right. I agree.
All right. So the fourth point is risk management. Infinite banking involves using life insurance as a financial tool, and understanding the risks and benefits associating with it is crucial. Having the right mindset helps individuals make informed decisions about their financial strategy and risk tolerance. Now, risk tolerance, I think, is something that is kind of controversial, because when you are making money, then people automatically assume that there's some sort of risk involved. I strongly believe that there should never be any risk when you have proper planning. Other people can probably dispute that. However, I know that in our financial journey, the more educated decisions we make, we're able to shield ourselves from risk. And also really how important it is to have collateral of never investing in something without having a proper guarantee. That's the biggest thing that I think has helped shield us from this supposed risk that we're supposed to take, because we also look at the wealthy and how they invest. And the idea is you're not going to get wealthy if you're risky.
Yeah.
And risky to me just means irresponsible.
Or gambling.
That's a risk.
The only people that take risks are the people who don't have the education. Those are people that take risks. Just like you said. So when we think of wealthy people, they're not taking risks because they understand what they're putting their money in. Why would I risk my money for something that I could possibly lose all of my money in? Does that sound like a wealthy person? That sounds like a
desperate.
Yeah, that sounds like a desperate person. Mm-hmm. When I think about this as it applies to this concept with infinite banking, their risk that we decide to take goes back to our education level and our responsibility. All these things kind of go together. Mm-hmm. If we decide to use this concept and it doesn't work to our liking, who's responsible for that? The individual.
No, the devil in the tax.
Or your insurance agent.
Yeah.
The insurance agent reached in your pocket, pulled out your money, paid the premium, gave you a death benefit,
signed all your paperwork,
and it's their fault. Yeah. Mm-hmm. But risk management itself is our inability to educate ourselves.
Sit on that one for a minute.
Are we going to invest in the stock market without doing any research? Your risk tolerance has to be very high. When you have somebody else investing your money on your behalf, you have to understand the risk tolerance, because they're going to invest your money in stuff that you could possibly lose your money, but they'll still get paid their fees. Right?
They still gonna make money.
They still get.
They gonna make their money, right? Because that's their profession. That's what they should be doing.
Right, but we need to take that responsibility ourselves.
Yeah.
We talk about the banks and how we can create our own financial system just like the banks. The banks have it all figured out already. They have the lending, they have the investments, they have all these things figured out. But when we go and we say we want to do what the banks do, we don't have any of those things in place. We have to start from ground zero, where the banks have been in business for 100 years prior to us being born. They have these things in place. They have the systems in place. Mm-hmm. We have to create these systems ourselves. Mm-hmm. When the bank first got started and didn't have these systems in place, they didn't have everything figured out.
Yeah.
But it was through education, repetition, commitment, and patience, taking responsibility. Mm-hmm. They were able to put these things in place, and we have to take on those same roles and responsibilities right now, so that the next generation or 100 years from now, our family can look at what we built and say, he made the best decision for the family.
Yeah.
And the only way we can do that is through financial literacy.
Mm-hmm, mm-hmm. So through everything that you're talking about, it just made me think of why don't we take on more responsibility or take the time to educate ourselves more with money?
Because we don't have to.
That's deep.
There's a
different ways.
There's a reason why there's different income classes.
Levels.
Yeah, you have your lower class, your middle class, and then you have your upper class. Mm-hmm. Those wouldn't exist the same way.
Upper class education.
It wouldn't exist the same way if everybody was aware of the same financial literacy.
Well,
what's being taught in wealthy families and what's being taught to the lower class is completely different. Mm-hmm. What's being taught is a mentality. Mm. There's a mentality of success and there's a mentality of poverty.
Wow. Yeah. And to that point, it's crucial for us to understand this, which is why we said, do you think you know about money? Because there's levels to this. And from what we always thought that we knew about money, maybe we just had a mentality around what our certain status should be that had nothing to do with actually making money, right? We were just trying to have the status because everyone in our neighborhood drives a certain car. Everyone in our neighborhood landscaping looks a certain way. So we need to do all of that, but have no idea around how to manage any of that.
Yeah. Are we really making money?
No. It's the system. Like you said,
it's a part of the system.
We're just plugged into the system.
And then the money we make we're not being paid the value that we're actually earning. We're being paid to work in somebody else's idea or vision or utopia that they have in somebody else's system. Mm-hmm. And we get paid for it. But we're not really making money. It can be said based on that a lot of us have never made money. Just because we have money in our bank account and we're being paid money for our time, we're not making money. We're just trading time for money. Yeah,
I just need a minute, Darius. No, I mean it's such a profound thought.
Well,
it's so profound. Like I said, I just need a minute. Are we actually making money? Ask yourself that. Are you actually making money? Because then that debates or offers a debate for what is money.
Yeah.
Right. And what we know of money is an exchange. It's a value exchange. And so time is money. As people say, money is time, whatever it is. If you are plugged into the system, then you know the exchange of value that you're having is just time. Your time is currency because you're exchanging it with the digital asset, which is money that gets into your bank account.
It's a short-term fix where you go to work, you trade your time for money and you get paid, and then you pay your bills and you have to go back to work to make enough money to pay your bills again. It's a cycle. It's a short-term plan that you're subscribed to.
It's a short-term plan that's long-term.
It's a short-term plan that's long-term.
Right? Because you live for every 2 weeks.
The cycle
for the rest of your life.
It's because that cycle is so short. That cycle is only 2 weeks when we need the cycle to be for a generation.
Yeah. All right. So we're on point number 5, and point number 5 is long-term wealth building, which states the concept aims to provide a foundation for long-term wealth building as financial security. A mindset focused on long-term financial goals and wealth preservation is essential for achieving these objectives.
It has to be long-term. What we do on our day-to-day for the average person is a short-term fix for a long-term problem, right? We go to work every single day so that we can retire, right? Retirement is for years and years and years when we work and we look forward to a check every 2 weeks. So we again, like you said earlier, it's a short-term fix for a long-term problem. Mm-hmm. And in order for us to change our mindset around what we're trying to fix, what we're trying to create long term, even beyond us being here, I think infinite banking does that because it forces us to start thinking for a generation,
totally,
instead of for the next 2 weeks.
Oh man, there's so much meat on the bone with this particular topic because I'm always going to relate everything back to what you were talking about, budgeting or cash flow. Right? Long term, you still have to plan, baby. Right? You got to plan for your wealth when you're budgeting. You got to plan for your wealth when you're trying to get cash flow. Whichever side of that temperature gauge you're on, we're also relating this to infinite banking, what we teach. Mm-hmm. And so it doesn't matter at any point that you're in your financial journey, you can't just plan for the next 2 weeks, right? You can't just plan for the next month. you have to understand what's happening, because when you think about your personal economy, which we consider like your household income, you need to figure out what activities do we have going on within the next 90 days. Do you have children? Do you have family members? Do they have things going on? Those things cost money. If you have children, do you want to pay for education in the future? How is that going to look? Does homegirl need a car? In a few years, you have to be thinking ahead. And if you're not thinking ahead, you're always going to be scrambling to pay for that car when your children gets her license. You're always going to be scrambling to pay for retirement. I can't tell you how many people come to us and say, I'm in my 50s and I have no plan, right? So it's because we've been living in that short-term realm mindset for the long term.
Mm-hmm. Now, what comes to me when I think of, as you were talking, what came to me is the purchase of a new house, where most people, they look at the monthly payment. The monthly payment may be $2,000 on that house.
I can afford that.
I can afford the monthly payment every single month. I can pay $2,000 every single month.
But I can't afford $200,000.
But I can't afford $250,000 for the house. So I'm going to get a mortgage. I'm going to pay this every month. Long term, 30 years, what you've done is you've paid $500,000 for that house, paying $2,000 a month. So your short term thinking or short term plan cost you double over the next 30 years.
And financial literacy will tell you can't afford the house. You should never buy the house.
Right.
But what does our society tell us? Oh, homeownership is such a privilege. For who? Who got that extra cash? Not you. But it's the equity. I hear you. Those in the back that said, oh, it's the equity. It's the equity. How do you spend that equity again, friend? I'm sorry. What was that? Okay.
So
I'm glad we had that conversation.
A long-term play, if I'm going to pay $500,000 for something over the next 30 years, how can I, what I bought was for $250,000. How can I take $250,000, create a plan long-term and buy a second house? Because I'm going to buy a second house anyway, buy a second house to pay for the first one. Now I have cash flow. But there's that difference between a short-term and a long-term plan.
Yeah.
When it comes, when I think of the concept of using life insurance, it's a long-term plan, because at its foundation, insurance is long-term.
Yeah.
It's for when you pass away, which is years and years from now, more than likely, because the insurance company wouldn't give you sell you a policy unless they look at your medical records and say that you're going to live for a long time.
Yeah, and the process about this whole thing is looking at the options. And the option should always be me planning for the future. Always. Because when you plan for the future, you know that you're taking care of your future self, and you never have to go back to worrying about, oh my gosh, how am I going to figure out how to do X, Y, Z, and continue to put yourself in the same financial predicament that you do time and time again. So when we have that argument of taking $2,000 a month and spending it on a house that you potentially can't afford, how about you take that $2,000 and figure out how to make cash flow from it, right? Split the difference, get something, rent something that you can afford, right? And then take the difference and create cash flow, so that as you start stacking your assets then can come back and pay for your future house. Options, perspectives.
Right. And I think about our situation where we're in a community of people where we all have similar ideas. What's wrong with surrounding yourself with other people who have similar ideas, so that you can think outside of your box? The only way to step outside of your box is to think outside of your box is a step outside of your box. All the best ideas are outside of the box. So when I think about the community, what's wrong with not having a house for a couple years and putting the money that you would have put into a house, actually save it and buy a house and put somebody else in there so they can pay you. And then you get the second house. That creates cash flow, that gives you an opportunity to build something long term, rather than just playing the games of what's in front of you.
Yeah. And by the way, too, friends, we want you to know that we're also speaking from experience.
We're really talking to our future selves.
Or our past self.
Our past selves.
Yeah. This is therapeutic for us. Because, when we were talking about houses, Darius and I bought our first house together when we were 27 years old.
When we first got married.
And we had our house built right? So we know we thought we was doing something, building a house, in our 20s. And then we got it and we're like, man, this thing is expensive. It's cute, but it's expensive. So what are we going to do?
Hey, we could afford the monthly payments.
We could afford it, but we couldn't afford the whole house. So just things to challenge you, right? All right, let's jump to the next point, which is about flexibility and adaptability. So the description is here. Financial situations can change over time, and a mindset open to adapting and adjusting the infinite banking strategy as needed can be beneficial. This includes making necessary changes to paying premiums, adjusting policy loans, and the reallocation of funds within a policy.
That comes with having control. When you have control, you can be flexible and you can adapt. When you don't have control, you can't. So you have a mortgage with the bank and you have some change in your income. You still have to make those payments or you won't have a house. When it comes to with having control with your insurance policy and using those funds, if you have your mortgage with your loans, for example, and you're making payments back to the insurance company, if something changes in your financial situation, you add that payment to the back. You have more control over that because you own this contract. You don't own the contract that you have with the bank. Mm-hmm. The bank gave you that money, so they control.
Mm-hmm. Mm-hmm. And I hate to sound like a broken record, folks, but we have to relate this to budgeting and cash flow again, right? That scale, wherever you are, whatever this pertains to, right? We don't want you all to just focus on, what Darius and I talk about, which is infinite banking. We're talking about crypto, right? We're talking about stocks. We're talking about real estate. You have to be flexible and adaptable in any facet that you're in, remembering the role that you are playing with your money business. Okay. And I have to say flexibility, like y'all got to get in some yoga or whatever it is, because you have to be as flexible as you possibly can. You have to be as creative as you possibly can be, because you just never know what's going to happen within the economy. That's one thing that you can't change or really predict. We know historical that there's certain cycles, but when you are trying your best at managing your family income, the other thing to note is that you need to be so solid in your financial economy that it doesn't matter what the world economy is doing, because you have your plan solid inside your personal economy.
Yeah. What comes to me with flexibility and adaptability is cash flow. Mm-hmm. And if I look at the bank, they have cash flow. They don't have cash. When I think of fractional reserve banking, them able to lend out 90% of their income, they're not trying to keep all this cash on hand.
That's a good point.
What they're trying to do is create cash flow. That's why they create the programs that they create with mortgages, cars, debt consolidations, credit card, personal loans, business loans. All these are contracts that they put out there that generate cash flow, mm-hmm, mm-hmm, right? Mm-hmm. Not having cash on hand. Mm-hmm. What we're fixated with is cash is king. I don't think cash is king. If I look at the banks, cash isn't king. If it was, then they would have all the cash. If I go and ask the bank for $10,000, they may have to order it because they don't have that kind of cash on hand. Mm-hmm. So when I think about it, putting myself in that same role, in that same responsibility as being an insurance policy holder and using my cash value, it's to do the exact same thing, which is create cash flow through these contracts of investing in real estate or maybe lending on a car or doing business loans or things of that nature, because I can control the cash flow through these contracts. 100%. Flexibility and adaptability, in my opinion, is all about having cash flow.
Totally. I think the illustration that you use relating to the banks is beautiful, because that's really what it is. For them, cash flow is king. Mm-hmm. Having money constantly come in. What does cash flow mean to the banks? It's all of you all who have mortgages and car payments and all the debt that you have through the banks. Every single month, everyone has to contribute to that cash flow in your monthly payment. That's what the cash flow is that we're talking about, is the cycle of money that's coming in constantly.
And it falls into that category when financial literacy of compound interest. Yes. They're able to earn compound interest. You can't earn compound interest with taking money out and using money. You can with stagnant money, but as you use the money and replace that money, you're no longer earning interest. You have to start it all over. Yeah. But when you have a contract out there that people have to pay interest on top of the interest, you can put that in the contract, where you can't with your money just sitting there. You only earn what you're allowed to earn at that particular point. But
exactly.
through flexibility and control, you can have control to create those contracts. We just don't take it a step further.
No. Yeah. We just put our money in the savings account. And
most of us don't take it a step further. There's a small percentage of people that do take a step forward.
And kudos to you if that's you, my friend. All right. So the next point is legacy and generational wealth. So infinite banking often has a generational aspect, with individuals using it to build financial legacy for their heirs. Having a mindset that values leaving a financial legacy and providing for future generations is a fundamental aspect of infinite banking.
Right. One thing about money is you can't take it with you. You cannot take cash with you, and
you can't take anything with you.
Well, no, you can't. But what you can leave behind is education on how to use the cash that you did leave. That's why there's a difference between wealthy people and the lower class, is because of the education that they're providing to their members in their circle around this idea of money, around financial literacy. So I think with the idea of using cash value for my insurance is also in the realm of educating the people that's involved, or educating the people in my family on how this is being done, and how you can take this same this same thing that I'm leaving you and apply it to you.
Yeah. And as you were saying this, I was also thinking from a different aspect too. So not only are we trying to pass down education, but and the process and the systems, the other thing that you should be thinking about too is like, what really are you leaving? I was having this conversation with my mom not too long ago, and we were just having the conversation of like, when loved ones pass, how much of a nuisance is it to clean their houses and dispose of the things that are in houses? And a lot of times we tend to keep things because we want to pass it. But really, when you realize it, that a lot of those things don't have any value or any meaning. It's just, whatever we become attached to. So that's why, again, when we think about money, when we think about the stuff in our house, like, what are we really leaving our family? Are we leaving a bunch of junk? And typically, if we're leaving a bunch of junk, that can translate into our financial system, right? Because how you do anything is how you do everything. So try to be a little bit more intentional with the things that you have in your house. Are they assets? Let's start maybe collecting paintings. Let's start collecting jewelry or things that can actually be of value to the next generation, so that if you were to pass something in your house, let the homie come up on a Rolex or something, right? Because that appreciates. Right?
100%.
I don't need, a sofa, that my grandmother had from 1972.
That's got a dent in the seat.
Or the plastic on it still. Yeah, like think about the generational wealth that you're actually trying to transfer.
Yeah. Financial literacy. It's an ongoing process. It's never too late to start improving your financial literacy, but it is important for you to make a decision. Consider taking courses, reading books, taking online classes, because financial literacy is very important to how you understand money and how you apply what you learn, and how you take responsibility for the finances that you have and you receive.
Yeah, I can say for myself, from a personal standpoint, when it relates to financial education, is I know that I have like a certain temperature check. So I know that, like, if I've gotten if it's been too long where I haven't had financial education or some sort of input into my system to continue to challenge my thoughts about money, then I feel out of control. And I don't know if many of you can relate to that. If you just always feel out of control, then maybe that's a nice temperature check for you to recognize that, okay, maybe I need to go read something, think about something, do a podcast, watch a YouTube video, whatever it is, so that you can get back in the game. So I know for me, like I was saying, just from a personal perspective, it's very important to keep feeding yourself with information so that you stay engaged with the whole process.
Now, as it relates to using life insurance and the cash value, it's not just a financial strategy. It's a holistic approach to finance. And your mindset plays a huge role in your success or failure in this specific strategy. And it goes back to our financial literacy, our understanding of the basics of financial literacy, that this concept brings all together. It takes discipline, it takes education, it takes patience, it takes a long-term perspective that can be a significant difference in how the next generation is able to benefit from the things that you create right now. Because again, it's a long-term strategy, a long-term play that goes beyond you right now.
Absolutely. Now, we know that we have challenged a lot of the things that you've thought about money. We've challenged it ourselves. And so with this newfound understanding, we hope that these 7 points that we shared with you is something that you can start to take and exercise by taking action and getting in the game, right? So that you can no longer be a victim in your financial future. So go ahead and take action, and you can do that by checking out our next video. And don't forget to own your own lifestyle.
Or someone else will.